And we are live. Welcome in, everybody. Thanks for joining me on this Sunday. Mic check. 1, 2, 1, 2. A little bit of a different time than usual, but I'm glad you're here. Get this started. Hello. Welcome, friends, to Alpha Beta Soup. I'm TXMC. It is Sunday, April 14th, 2024. It's a little bit later in the day than we normally go live. I've gotten some comments from friends who live in different time zones asking if I would consider streaming at different times once in a while to give them a chance to join live. So that's what we're doing today. Rather than streaming at 11 a.m. U.S. Central Time, it is 6 p.m. So maybe a few of my friends over in the Eastern Hemisphere or wherever else their schedules may be more accommodating, hopefully they get an opportunity to join us. And if not, well, there's always the replay. Thank you for being here. Today is mostly going to focus on the Bitcoin chart, what's been going on in crypto, and we're going to talk about some on-chain things, which we've touched on at different points in prior streams. But I figured today we would just really focus on that, not talk crazy deep about the Fed and the economy and global situations and all that kind of stuff. And rather than bouncing around, try to keep it a little more focused today. That's my idea, at least. I am your host, TXMC. These are just my opinions. Please do not take any of this as advice. It is purely for entertainment purposes. Thank you for being here. I was watching, as I prepared for the stream to get started here, was watching because futures just opened. And, we've got a lot of war fears tingling around, a lot of things buzzing on Twitter. Suddenly everyone is a geopolitical and military expert. And I was watching the open in futures just to kind of see what happened. Part of the reason I was really interested was to see what happened with gold, because over the weekend, while futures were closed, there is a token called PAXG that is backed, according to the token's design, backed 1-to-1 by physical gold. And it was trading over the weekend. And over the weekend, it looked like this. It went from 2,300, 2,375, and it spiked on a squeeze all the way up to 3,400. Now, I've never traded this symbol. It could be very illiquid for all I know. But as you can see by this red line, it has followed the price of gold since its launch a year ago, really closely, 2 years ago, really closely. So I wanted to pay it some respect over the weekend, and I just saw this huge spike here in gold. Alas, that hasn't been matched by what happened to gold at the open just here in the last few minutes, last hour, I guess, last hour or two. This is what gold has been doing. A little pop. Now we're consolidating. And I've also been looking around, like here's the S&P. Equities are up a little bit. Gold is up slightly, and bonds are selling off. Well, that's kind of what you would expect with war on people's minds. That tends to be pretty good for stocks. Because war is good for business, and it's good for gold, and it's bad. It can be good for gold, good for commodities, and it's bad for bonds. So it's kind of what we're seeing right now. And I don't know. We'll just kind of watch from a distance and see where that takes us. But yesterday, over the weekend, we got a really nasty dump in crypto. And it had a lot of people nervous. I saw some folks comparing what happened yesterday to March of 2020, which is a really tone-deaf comparison to make, because if you were actually in a live market environment in March of 2020, you remember what it felt like, and you would not have compared yesterday or anything we've seen since March of 2020 to that, because nothing has compared. That was a feeling in the market, a certain kind of fear that we haven't seen since then, and we may not see it again for a long time. Hopefully we don't. But a surprise dump in crypto that sees BTC fall about 15% and a bunch of other altcoins falling 30 to 50% in a couple of hours is not what happened to global markets in March of 2020. Let's just be clear about that right up front. But it was a check on a lot of the leverage that had been building up. And I was looking for a good chart that captured that, but it actually, the damage was wide and indiscriminate, but also doesn't look as bad on Bitcoin, right? It was actually most of the rest of the alt space. Hold on, I got to let my cat out of my office. One second. Of course, they wake up as soon as I start streaming. Okay. So the flush, I try to find a chart that shows like how much leverage got wiped out of Bitcoin or of this chart or that chart, but I couldn't find one that really captured it. So we'll just focus on the price charts. But BTC, this is BTC on Coinbase. Here was the action yesterday. And for all of the hubbub and all of the fear and bearishness on the timeline, on Coinbase, it didn't even set a new low on the price chart. It barely set a higher low. Now, it did set a lower price on a couple of other exchanges. And you know how the prices are never exactly the same. Coinbase can be one thing, Binance can be another. There can be a delta between them. But yesterday it made a slightly lower low. I guess you can see it easier on a daily chart here. Here it is on Coinbase. Like I said, it's actually slightly above this wick here from March 20th. But on Binance Spot, it broke it barely. And on the Binance Perp, it actually went quite a bit lower. And this low, what price was this? This low is 59.6. That's actually below 60K on the Binance Perp yesterday as a bunch of longs were getting squeezed and people's positions were forced closed. And so, when I'm looking around, I feel like it's important in in the moments like we had yesterday to zoom out and look at high time frame and see if structure has even been broken irreparably across the market. And what I've found looking around at like weekly charts, across the space, is that the message is really mixed. What happened yesterday, it didn't really shatter all the charts. It just doesn't look like a market-wide breakdown in structure for everything uniformly, but it's really a mixed bag. There are a lot of coins that absolutely just look like shit. Like Aptos completely gave up basically the entirety of its 2024 move, gave all of that up yesterday. I think Celestia also did something similar, gave up the entirety of 2022, but then had a strong bounce. And so if you're the kind of person who's really like nitpicky about market structure, you can find some reasons to be optimistic about various charts, depending on what your bias is. Like for instance, here on the Bitcoin chart, yeah, we set on the Binance Perp, we set a new low, but then we rallied hard, right? It's bounced strongly off of that low. And from a weekly perspective, if we close here in the next 49 minutes, which will probably close the weekly chart right before or right after the stream ends, then that's actually a fairly bullish close. It's above the low from last week. It's way above the low from here. To get a real structure close, in my opinion, we would have needed to see a candle that did one of these. It would need to come down and close the body of the candle below here, right? And then we got the wicks, whatever the wicks look like. This is what this candle would have needed to look like. Fill all that in. This just a big red candle. I'm drawing in green, but I would have wanted to see the body of this candle closing below here. And that would be a clearly bearish structure break on a weekly chart after a kind of swing failure on this pivot right here. So that would be a pretty bearish look. But on the surface here, it's not as clear. It's a little bit more of a mixed bag. And so for Bitcoin's sake, it doesn't actually look that bad. And when we consider that we flushed all the leverage, then you might be able to find a constructive argument here for Bitcoin maintaining some composure and maybe actually digging its way out of this. It's hard to really know, but we've seen time and time again on this move where we've thought structure was going to be completely toasted. It got really close only to recover and start working its way out. It did that here, it did that over here, and it did that over here. So it's hard to jump to a conclusion, especially when we're waiting to find out how much equities are really breaking down. They look a lot worse than what's going on in crypto. Are they going to diverge? Are we going to see the breakdown in the Dow Jones bleed over and Bitcoin actually break some weekly structure? Because that's what's happened on the Dow Jones. The Dow Jones weekly structure looks awful. These are the last 2 weeks on the Dow. We're below this low right here from February. And it's a rejection of the 4.236 fib extension off the great financial crisis. So like that's an ugly weekly chart on the Dow Jones. It doesn't look quite as bad over here for BTC. You know, when I was looking at this structurally just to kind of figure out, okay, is there a place where I could take a trade? This is a box that I had drawn a long time ago, actually, and I got long for a trade here back, I mean, I guess it was several weeks ago now, 2 weeks ago. I believe I was long on a trade here for a move back up, and I ended up selling around this level. I wanted new highs and didn't get it. But this is a bit of a demand zone that was developed back here in February. We've tested it once, even maintained the midpoint of it. Let me show you here. Even defended the midpoint of this area, and we've come back down and tested it again. And if we zoom in, maybe we're actually starting to form some bullish structure. So like when you see a dump like this, if you actually want to get long, you don't need to try to catch a falling knife. You don't have to guess and hope that this red candle that you're buying on is the last red candle. Just wait for the structure to confirm a turn. So if we look at it here, we just have continued structure breaking down, breaking down. But if we zoom in a little bit, we can kind of see where we would need to see support coming in to maybe tell us that we're actually going to turn and go higher. We're down on a 1 hour chart. We've got this pivot right here. We're consolidating around it. If we can get some price action that starts developing like this on top of this structure, on top of this line, that starts to look pretty good in the context of what we were just talking about, big picture, right? We've got this demand zone that we came down into. The weekly chart still hasn't even broken down. Maybe Bitcoin recovers. Maybe this is just more of that kind of chop around the previous all-time high that we've seen in past structures for BTC that we've talked about here on the channel quite a bit. We're still just working through the prior all-time high. This is what it looked like in 2017. Right here, right? We're kind of just doing this right now. So, still a question mark for BTC. ETH looks a little worse, I would say. It looks worse for where structurally, where we were able to make a good case that Bitcoin held up. Right? We haven't had any closes, any new low closes. Here's one on the daily, but on the weekly, it still looks pretty good. Ethereum's structure is less appealing. It looks weaker. It is underperformed. It's actually been underperforming most of this entire run up. It's underperformed alts. It's been the saddest member of the group, I would say. Its weekly structure also has held up in terms of strict rules about market structure breaks that I would use in like a trading situation. We haven't actually broken weekly structure. And if this closes like that, that actually looks pretty good. And from a bigger picture perspective, if we look at the yearly range from 2022, here's January of 2022, we just swept that level. Look at these weekly look at these weekly body candles respecting this area here from January 2022. We've swept it. We've pulled back, and this weekly candle is now closing. Let me turn off my price line. At the quarter mark of this range. You see that? Here's 50%, here's 25%, here's 75%. And you can see how price has respected this range throughout the last couple of years. And here we have a weekly candle, maybe closing there. Maybe this is as bad as it gets for ETH. We come down, we sweep these lows, we close out some leverage, we get a bullish close on the weekly that doesn't completely destroy structure. Maybe we start to dig our way out. Can we zoom in and find that market structure was wanting to turn? Why, yes, friends. Yes, we can. Remember when we drew this line just a moment ago on Bitcoin? Well, this actually looks quite a bit better here on Ethereum, doesn't it? We're actually above the prior pivot, and we're curling. We're showing demand. We are testing the level below, and buyers are stepping in. And now we're breaking above this structure. That looks pretty good. It looks constructive. It's a 1 hour chart, so don't get too excited. But this is the kind of thing that we can build a constructive thesis that maybe price is holding up. And when you have a kind of move like we had, everyone gets super bearish. If it's not actually the end of the market, the end of the move, then those are the opportunities for you to go shopping. If you are in the market to add to existing positions. Maybe you don't want to open a brand new spot position on something that you're optimistic about all the way up here. But if you have something running already, these are the kind of places where it makes sense to add to a long-term spot bag or a swing play that maybe you're running for the current cycle. Like I have a bunch of alt positions. I'm running you through my thought process, and in the last couple of days, I have been adding to certain positions that I felt like show relative strength and that I have higher confidence in. Now, I might not want to add to something like Aptos. I don't actually care about Aptos, but this one looks significantly weaker. I'd have to really give this one a hard look and think about it more than looking at Ethereum and saying, well, you know, structure's actually holding up. That actually looks okay. Let's zoom out and look at the bigger indexes. Let's check out others. Others is the crypto market excluding the top 10. So this is kind of like another version of Total 3. And if we look at this pivot area from this big breakdown, right when Luna collapsed in 2022, well, we've swept that level, we've broken down, and look at that, a back test of the midpoint of this range. That's not that different from the range we just applied to the Ethereum chart. So we've back tested the midpoint of that range, and it's also confluent with this area here, this area of consolidation before the market broke higher in structure. This is a weekly chart. This is like a 2-month just hanging out right here. We've now back tested that pretty cleanly. Strong bounce. And if we zoom in a little bit, structure looks constructive. It looks decent. Now, you can always be wrong. This can always turn around and just continue to go lower. But these are the signs you look for. If you're going to start trying to anticipate, maybe you add to a position, maybe you've been sidelined and you're looking for an opportunity. This is the kind of thought process you go through when you're investigating charts one by one. There's not some big blanket approach that you just apply to everything. You need to be rational and look at each chart and take it on its own merits, but in the context of what the big dog looks likely to do. And the big dog looks pretty constructive, I would say. Doesn't look great. Equities look kind of shitty. People are afraid of war. I understand. But it had an opportunity yesterday for the price chart to absolutely take a shit, and it managed not to. So that might contain signal in and of itself. Let's look at breadth. So we've come to this chart several times throughout the last few months, checking in on it, looking for confirmation of positive or negative momentum within crypto. So what this is a breadth momentum oscillator. If you've ever used a MACD basically compares two moving averages of price together. It shows you how far apart they are, and it's a way to measure momentum. This is kind of the same thing, but it measures coins that are advancing versus coins that are declining, altcoins and Bitcoin. Everything in the top 40 that's not a stable coin. That's the indicator that I built here. It's not available publicly before you ask. Maybe I'll make it available in the future, but I've been reticent to do that. So before you ask, you won't find this one in TradingView. I keep this one for myself for now. But it's been very useful, and it has followed price pretty consistently at times, especially on lower time frames. It's really come in handy because on the way up in March, it started to show the relative weakness inside of crypto. Fewer names making higher highs, while the total cap minus stablecoins continued making higher highs. And we've now been watching this momentum churn sideways as price churned sideways. So on a daily perspective, we still haven't seen this beginning to curl, like higher time frame. We're not seeing a base form like we did back here in late January before the next push higher after the ETFs launched. We really need to see that. Like, this is not a predictor of price, but it's confluence if you are thinking about flipping your bias long or short across a multitude of plays in the space. Because logically, if you are wanting to go long, you should expect, more often than not, coins on average to be making higher prints rather than making lower prints. And if the momentum is still pointed down on this measurement of top coins, then the space is still heading in a certain direction, and you might be counter trading it. And it's just something that's good to be aware of as a trader. If we go down a couple of time frames, what I like to do with this is I like to start with the daily, and I get an idea of the momentum. You can see it's kind of this gator jaws down look, right? It's just a big open wedge pointing downward. And it's not really showing a curl here on this blue line, which is the faster of the two lines. We'd like to see that start curling so that this one can start curling. So I like to roll down in the time frames and look for strength forming on lower time frames, because if it holds up, then it bleeds upward into the higher time frames. But if I keep going down here, I'm on the 12-hour. Here I'm on the 8-hour, still wide. Here I'm on the 6-hour, not yet. 4-hour, maybe, but we haven't gotten a crossover to the upside yet. But we're seeing a bit of a curl on the 4-hour time frame, meaning a few coins have bounced. And that makes some sense when you see the price chart. We just looked at ETH. We looked at, I think, Celestia. We looked at Bitcoin. We looked at a few random ones. We zoomed way in, and we noticed the structure doing one of these turns, right? Where you've got a downturn, and then all of a sudden you get one of these. That's the moment you're looking to get long. And we're starting to see that kind of form, but on a high time frame momentum perspective, the whole space hasn't really caught on yet. We're waiting to see more candles. All that this needs is time. It just needs more x-axis to go by for this to develop. But if we keep going down, now we're on the 2-hour, maybe we can notice this being more constructive. But, from the 4-hour to the 2-hour, this doesn't really look that much better. Momentum has slowed here, but it hasn't even crossed on the 2-hour. The 1-hour looks good. The 1-hour has completely reversed and bounced hard. And from a momentum perspective on advancers versus decliners, it's recovered like the last 3 days of chop solidation on the 1-hour time frame. So we just need to see this continue building higher like that. And then we can see it rolling up into the 4-hour, into the 8-hour, into the daily. And what that means is that if that is happening, it means coins are going higher. Whereas you can have relative strength turning higher, but price keeps going down. And sometimes that can be a clear signal that something is kind of amiss. With this momentum oscillator, it literally is the prices. So if it hasn't turned, then top coins have not reversed their momentum. So it can be a nice confluent factor. To go along with it is something that I call breadth. dispersion. So like inside of these lines here that we were just talking about is a bunch of different tickers, and they're all moving at a different percentage, right? And within each one of these candles is a time frame. Right now we're on the daily. So inside of each one of these candles, each of the top 40 coins moves a different amount. And that's represented down here. This candle, each one of these candles represents the percentage change of all the coins inside the top 40 within that time frame. So if you see values up here above 20% on the axis, then there are coins in the top 40 having 20% days because we're on the daily time frame. We had a bunch of that back here in early March, you see? But we haven't had any of those since mid-March at all amongst the top coins. That's the way to read this axis. When it's blue, more are rising than falling. When it's red, more are falling than rising. And the body of the candle represents 80% of everything inside the bucket. So we've got the top 40. 80% of them are inside the body of the candle. And then the bottom 10% and the top 10% are inside the wicks. What that means is, when we get a candle like this, like we had on Friday when everything started to dump, and it's got a big red body and a really skinny little wick right here, what that's telling us is that the majority of the names inside of this group, inside of the top 40 altcoins, the majority of them had negative gains, and that it was very consistent, that it was widespread. The majority of them are contained in this box, and there's very little action on the outside. So this drawdown of 17-18% captures the majority of the top 40. They all kind of had a similar day. Whereas if you see something like this candle right here, it's got a teeny tiny little blue body and this massive wick. Well, most on this given day, on March 4th, most of the market had a ho-hum positive day, 3 to 5%, maybe 6-7%. But there were a couple of coins, maybe just one, that had a 59% day. And so it created this massive wick, but the majority of the action was down there. And so you can say, yeah, well, that was probably just an outlier for that one name that happened to do that. Well, that's not what happened over the weekend. On Friday and Saturday, we got big red-bodied candles on dispersion, meaning a lot of coins having negative days, and they all kind of shared in the pain equally. There weren't a lot of crazy outliers. The gains were the losses were indiscriminate. And these two low prints here on Friday and Saturday, they were the lowest in a long time. So we had a pretty bad day on June 10th of last year, right here, right as we were capitulating down in the first of the big pullbacks in the summer for BTC here. Well, the second of the big pullbacks in the summer. This moment right here in June is one of the worst days on breadth dispersion. We had a lot of coins dumping at that one moment in time. That was right here. But we have to go all the way back to when FTX collapsed in November of 2022 to find a worse two-day pair of prints on this metric right here, this dispersion metric, since what just happened yesterday and the day before. So we've got, by all measures, we have a traditional, like, picture perfect capitulation event that just occurred on Friday. And then we've got a bunch of people comparing it to March of 2020, being super bearish. Everyone's worried about war. And then the market opens, and what is risk assets, and what are they doing? They're rising. Maybe we had a capitulation event on Friday and Saturday, and perhaps we're going to work our way out of it in crypto land and dig a little bit higher before all is said and done. I don't really know, but that is one way to interpret this data set here. We're just waiting to see the momentum in terms of advancers versus decliners actually building a base and starting to turn higher. And it looks like it's starting on the 1 hour chart. So that's kind of my overview on crypto generally and what it's been going on the last couple of days. Some charts look worse than others. Be selective if you are thinking about adding here, but this is the kind of place where you should at least be asking yourself those questions. If you are a buy and hold person who doesn't trade, ignore everything I said. Please just take this purely as entertainment. But if you're just kind of wondering how someone like myself thinks through what they're doing in these moments, you have a glimpse. Let me take a sip of my water here. Please hit the like button if you haven't already. I'm going to scroll back, make sure I've caught up on the chat, and then I want to we'll talk a little bit about Bitcoin on chain, because there are very pertinent questions we should be asking right now that pertain to whether or not this cycle has peaked. And I know I just made a whole case that the price chart looks constructive and that if you're trying to add that you should, and all those things are valid. But then there's another data set that is mixed in its interpretation, not having anything to do with the economy, just having to do with on-chain for Bitcoin. So we'll look at some of that here in just a moment, but let me catch up on the chat, make sure I'm not missing anyone. Crypto Crandall said, thanks for hosting. Appreciate it, man. Happy to be here. Matt Hebert says, what's up, big brother? Love from Medellin. What's up, man? Beautiful Colombia. I've never been there. I've always wanted to go. Chris Henry says, good day, DXMC. Thanks for hosting at a respectable 9 a.m. Monday. I get to watch live. See, that's what I'm talking about. I knew I had buddies down under and friends in the Eastern Hemisphere and elsewhere who just needed a different time to be able to watch if they wanted it. So I hope that you're able to scratch that itch a little bit and hang out in the chat for a live stream. So I'm glad you're here, Chris, and anyone else who might be doing the same thing. JB Estrada says, are we at the end game of this cycle? I'm not going to be able to answer that, unfortunately, because no one knows. If anyone knew, then they'd be a billionaire and they wouldn't be live streaming right now and wondering and asking questions. I think that there is a compelling argument to make that we are very near or at the highs for the cycle for equities and Bitcoin. There's also a compelling argument to make that this is just a, early summer, late spring correction. It's a spring summer correction. This time of year seasonally is usually when things kind of start getting weak into the summer. Tax season and all of that, sell in May and go away. This is exactly what happened last year. We had a big run up in the first part of the year and then nothing happened for like 6 months. You can make the argument that we're just going to correct, and because of the massive deficits that we're running and because of the inflationary environment we're in and all this money printing, that we're just going to go higher again. We're just going to keep screaming higher and have a melt up. And maybe that's true as well. All I'm going to do is present the information and wherever possible, give my opinion about it. But what I have learned, is that there's not a lot of value in strongly stating what I think is going to happen, because the market doesn't care about me, right? It never has. I'm just a dude on the internet saying what I think is going to happen. But I don't want anyone else to be misled by me sounding really confident just because I look at a lot of data all the time and I have strong opinions. That doesn't make me any more right than anyone else. And rather than having to always explain that, I just abridge, in some ways, the strength that I emphasize my viewpoints. And so I don't really know where we're going to go. I have been really bearish on the economy, and I kind of remain that way. We're not going to look at any of that data today. But there is a case to be made that very little has improved in the economy, and we're just kind of dragging this out more and more, which just raises the risk profile in some cases. But we're running huge deficits and there appears to be no political appetite to reduce them. So as long as that is the case, one could expect a general bullish undertone to risk assets. So it's hard to know. Chris donated. Hope you're well. Thanks for this Saturday treat, barbecuing snook right now. Hey, thanks, man. I'm glad you're barbecuing. That's awesome. I'm just chilling in my house. Jay Wiles says your bearish scenario is beginning to play itself out. Gold is breaking out. DXY is above 106. Yeah, we're starting to get to kind of a hairy place. We'll look at the DXY real quick. So DXY has been drifting higher this year. And I said at the end of the year, last year, down here, I said that I was generally bullish on the dollar in 2024. We are near the end of a global tightening cycle where most central banks were in lockstep policy-wise to fight inflation, and because the Fed was tightening so much that in some cases they had to kind of go along. But now we're at that place where central banks are starting to diverge. Their policies are starting to diverge. And it's very unlikely that any central bank is going to out-hawk the Fed, meaning that they're going to stay tight while the Fed is easing. So what that creates is a situation where there is a latent kind of passive bid in the dollar just because of the economics, the situation going on with other central banks probably easing. Some of them have already started to ease. The Swiss central bank is easing. I think the Polish central bank eased. I might have that one wrong, but we're starting to see that happening. The Chinese central bank is easing. They have to. And that leads to divergences, and it also creates a situation where the dollar becomes a bit of a vacuum. And we're seeing that playing out. And now the DXY is up near 106. And my buddy Blockchain Backers talked about this quite a bit. So some of you who watch his content might already have heard some of his views on that. But the 106 kind of area, just generally speaking, tends to be a place where risk assets don't perform well, and not fun things tend to occur when we are above that level. So there we are. Will we continue higher? I don't know. Dollar yen is at a level that it hasn't seen in 35 years. This is 30-year Wyckoff on the dollar yen. Is it going to break out? I mean, this is kind of like sign of strength on a Wyckoff pattern on dollar yen that has taken up the majority of my life. Like I was born back here. So FX is looking spicy. DXY is looking spicy. Equities, like we said, structurally looking a little sus. This is the weekly on the Dow Jones. Breaking structure. It's below this low, and it rejected the 4.236 off the Great Financial Crisis. That looks like shit. The NASDAQ is rolling over, not broken below its fib extensions. Doesn't look quite as bad as the Dow. Part of the reason the Dow looks bad is because of United Health looking like this. United Healthcare is the largest healthcare company in the US, and it is the #1 member of the Dow Jones by weighting. It's the largest piece of the Dow Jones. It looks like this. These are monthly candles. This is what it has looked like since 2022 started. And now it's breaking down. Now structure on UNH is being lost. If this keeps breaking down, it's going to pull the Dow Jones lower. So yeah, things are starting to look a little spicy. That's why when I talk about Bitcoin and I say it looks constructive, I have to issue a lot of caution notes and addendums along with that. Because what we have to respect is that Bitcoin is tied to equities. If equities are going to break in a dramatic way in some direction, up or down, Bitcoin will be sympathetic to that. If it's just going to range and chop around, well, then they can do their own things. But BTC has followed tech stocks forever. And now with the ETFs, it's even more tied to TradFi. It's tied to the office hours, to the volumes, and to the behaviors of the people in that market more and more as time goes by. So we have to be aware of what's going on in equities. And if it's going to look like complete shit, or make us kind of nervous about a structure breakdown, or maybe it's going to go into a multi-month consolidation, then that's something we need to be aware of, because it very likely could affect Bitcoin. Like, let's just look at the Dow Jones real quick. I don't use the MACD all the time. I don't use the MACD all the time, but let me just show you. So we've got the MACD, we've got the moving averages on here. Where did I add it? Is it going to add? Come on. Come on. There we go. We're finally seeing a cross lower where the shorter moving average is broken below the slower moving average on the daily. And the last time we had that was back here, which led to a 3-month correction on the Dow Jones. So are we about to see something similar here where we've got like 2 or 3 months of doing this? That's longer than 2 or 3 months, but is it going to look like this and then we bounce up? Because if so, then maybe Bitcoin hasn't set a low. Maybe it has. It depends on the veracity of this move. If this is pretty tame, if this is like a tame little kind of correction like this, then crypto can continue rallying, right? This isn't really that bad. But if equities are going to break down and there's going to be a big sharp bounce and they're going to bleed lower and do another one of those, then that's going to play more of a role in what happens to crypto. All right. So the ETF flows have slowed down a whole lot. Down here in the bottom, these are combined net flows into the Bitcoin ETFs. The red line is all of them, including grayscale, and the green line is everything minus grayscale. Now, a lot of the time, the flows into the other ETFs are highly sympathetic to the outflows from GBTC. And it makes me question like what kind of volume the ETFs will have whenever we finally move away from this period where GBTC is just constantly bleeding. That will eventually come, but it's probably not anytime soon. And whenever that happens, I'm really curious to see what the volumes look like for the ETFs, because so far, if you just look at the green and the red line and how close they stay together, like they haven't been diverging that much. The other ETFs aren't just completely doing their own thing. They're still just kind of following along. And the grayscale outflows are remaining relatively consistent. If we look at them here, this is, yeah, here's GBTC. This is GBTC's flows since the ETFs launched January 11th. It's by month. So we have, we've got a 5-day moving average in black. And you can see it's been pretty consistent, right? Like there's periods where it goes down, but then it just comes back up and it just keeps chopping around in this range, this like $100 to $400 million a day range. Now, February was the best period of time for these flows. That's when people were really optimistic. They thought the worst was over, but then it all just came roaring back, partially sympathetically with the price action, which people don't always like to hear, because I know that there is a narrative that whoever's buying Bitcoin is probably a hodler, but that just isn't the case. That's just not the dynamic we see in the market. So the ETF flows have remained fairly robust. And I saw some charts that I want to share from my buddy Checkmate, who's the lead analyst at Glassnode, and he built this chart of the ETF flows, and I thought it was really fascinating. So I want to talk about him here real briefly. These are on his website, checkonchain.com. It's free, and it's a bunch of charts that he's built. So definitely go check it out and give Checkmate a follow on Twitter. But this shows all of the balance of the ETFs, the total in black, the dotted line. The red is grayscale. And is there a way to turn off the tooltips? Yeah, I don't know how. Oh, here we go. Info off. Perfect. The red is grayscale, and these are all of the other ETFs. And what I think is pretty interesting, you can see the total Bitcoin balance of grayscale falling since the ETFs launched, and a lot of it being absorbed into the other products. And on net, the amount of supply that is being owned by ETFs, period, is on the rise, though it has flattened out in the last month or so. So this is in BTC terms. This is the same chart in dollar terms. These are identical charts. They're just in different denominators. Here's in Bitcoin. Here's in dollar terms. So we've seen the fall of the balance from GBTC. They've fallen from, what is the number? Let's turn it on. Grayscale fell from, where's the tooltips? Here we go. 619,000 Bitcoin to 316,000 Bitcoin. So 300,000 BTC. That almost half of their stack has been sold, right? But the AUM value of Grayscale's holdings are almost the same. They haven't moved at all. Look at this. Oh, no. Oops. Sorry, I'm using this tool for the first time. Reset axis. Here we go. I want to draw this box for you. Here we go. Look, the Grayscale assets under management, the total value of everything they hold, because price action has been so strong, it has stayed around the middle $20s billion, even as their amount of Bitcoin has gotten cut in half because the price has gone up so much. So in theory, if price action remains strong, Grayscale could sell $300 million worth of BTC every day, forever. And this line will just continue to chop sideways forever. I just thought this was funny and I wanted to show you. But I just thought that's kind of remarkable there, how their balance is falling, but the actual value is the same. And this leads me into my next point and into some of the on-chain stuff for BTC. So a lot of the talk around the ETFs has elevated them in the discourse as if they are the driver of price. People talk about them as if they are responsible for what's going on in the price action, and thus, in their minds, are worthy of being followed with a fine-tooth comb at every hour of the day. But I want to dispel a bit of that, because while Grayscale has played a significant role in providing supply at this period of time in the market, they are only one player in a very large and complex ecosystem that is the Bitcoin market. Bitcoin is much larger than anyone really gives it credit for. I've been saying this again and again to the point where I sound like a broken record. Let me show you some of what I'm talking about. So every time we have a bull run, let's talk about long-term holder supply a little bit. So in Bitcoin, we have two kind of pockets of supply. We've got short-term holders and we've got long-term holders. We also have other things like exchanges and miners, but generally speaking, holders are short-term or long-term. If you've held for 5 or 6 months, you are considered a long-term holder, and the likelihood of your supply being spent is much lower than newer holders. That's just statistically speaking absolutely true, and it's proven on the ledger all the way back to 2010. Older coins have a lower propensity to be spent. So the longer you hold, the stronger your position is, in quotes. However, in every cycle, we still have distribution out of long-term holders. And it is so important to emphasize this. The selling of coins by holders who acquired them in the past is a fundamental component to a bull run. It is a necessary piece. A lot of the time when I hear people talk about BTC, what they're going to do with their holdings, what they hope other people are doing with theirs, what they think the market is going to do, a lot of it tends to revolve around this idea that no one will ever sell, that everyone is a hodler, that every new address that buys Bitcoin that doesn't have any sell history yet, that person's a black box, and they're never going to relinquish those sats ever again. But in every cycle, we have seen and will continue to see long-term holders spending their coins. We enter a regime of distribution, and it carries us up into the point that supply overwhelms demand and a top is put in the price. This down here is the percent of long-term holder supply that is spent throughout time. And what you'll notice, if you really look at this chart, is that these periods of spending happen in the bull runs, right? People are paying themselves for holding this asset for a couple of years, sometimes many years, not knowing when they would ever profit or by how much. and paying themselves for taking on risk and enduring all of the pain of the bear market and all of the uncertainty and the mental energy expended in being a holder in a volatile market. People want to be paid for those things. And so when we break above all-time highs, we tend to see these periods where long-term holders are spending a lot of their coins. Back here in the 2018 market, it was a quarter of all of the supply held by this group. They distributed it, they spent it. Where it went, we don't know. Maybe it was given to another long-term holder who ended up holding on to it for a really long time afterwards. Maybe it was given to a new buyer who sold it immediately afterward because they didn't know what they were doing. I mean, who knows? It doesn't matter. The point is that the supply was inactive and then it came back to life when prices went higher. Because demand activates supply. Bitcoin is a living and breathing organism. It is not a monolith. It is not a big, illiquid hunk of granite that never moves, and it's always growing every 10 minutes at a time by the block reward, but it's never moving after that. That's just simply not true, and in fact, to me, would be a very sad story if that were the story of Bitcoin. Thankfully, it is not. We have a lively market full of volume. We have people willing to spend their supply into strength and allow new buyers to acquire positions. That's the only way that they can do it, is by someone else selling to them. So we need this component for price to go higher to continually reprice the asset higher. You have to sell. Well, we're seeing some of that distribution here today, though from a percentage basis, it's still kind of small, right? This says 6%. That's pretty low. We had 14% back in 2021. This looks a lot like the 2019 mid-cycle distribution. From this perspective only, it looks that way, right? Because of the relatively muted percentage. So when I look at it from this angle, it says to me, maybe we're near a high, but long-term holders could distribute more. And if they are likely to do that, it's probably because price is going higher. They're not going to continue to sell if price just goes sideways and then weakens. They will slow down their volume because that's what happens traditionally. They sell into strength most of the time. That's where you see the most notable parts of the volume. So let's keep going forward. Now that I've kind of diatribed about holders and how important it is, I get passionate about this stuff. Here is the same value. So here we have in orange percentage, right? This is actual Bitcoin. So total raw coins. You can see it looks pretty similar, but this value over here is a lot deeper than it was in 2019. Because long-term holders own a lot more supply than they did in 2019. So even though it's only 0.6% larger in a percentage term basis, it's significantly bigger. Here in 2019, they distributed 667,000 Bitcoin. Well, now it's 920,000 since their high in December. So what does this mean? Well, let's now talk about grayscale. Let's bring in the GBTC factor. So we see now long-term holders have distributed 920,000 Bitcoin. And what did I say a few minutes ago? That Grayscale, since it launched, has distributed about 300,000 BTC. Since the peak of long-term holder supply in December, they have spent, like I said, close to 1 million BTC. The amount of corn that has come out of the Grayscale Trust over that same period of time is 1/3 of the size. 311,000 Bitcoin. Long-term holders as a unit, as an entity of Bitcoin account holders, they have distributed 3 times the amount of supply on net that just came out of Grayscale. Now, Grayscale fits in this group. So the net of these two are all other entities that hold Bitcoin. What is the net of these two? At 920, 280 minus 311,403, 608,000 Bitcoin. So quite literally double of this grayscale figure has come from elsewhere. Someone else in the globe, somewhere, has transacted with their supply since December, who had it from long ago in the past, from at least 6 months ago, in some cases 1 to 5 years ago. We don't need to go into all the detail of which durations they are. But the point I want to drive home here is that this market is huge, that you should never underestimate the market's ability to locate supply, particularly if price is going to be strong, if it's going to be favorable. There will always be new supply coming to life. There is no scenario where Bitcoin doesn't get sold at all, because if that's the case, then we don't have a market. Everyone buying is buying from a seller. There is no such thing as more buyers than sellers. Every transaction has a party on each side. It's just about the imbalances and the liquidity and for how long it can be sustained. And we are seeing a huge sum of supply coming to life. In percentage terms, we know it's not massive. Maybe it gets bigger, but maybe it doesn't. You know, back here in 2013, it was 11% and then 15%. It wasn't the 25 that we saw here. It was kind of closer to 2021. Are we going to get that again? Is it going to be more muted? I don't know. But it's a lot of BTC already. The amount that they distributed 3 years ago was 1.7 million. This is already 50% of that. So from this perspective, long-term holders have done a lot of work. It's not just Grayscale. There are other Bitcoiners offering up supply. And it's not just going to the liquid markets. It's also going to the OTC desks where the providers for the ETFs actually find supply. The OTC desks are working overtime, especially at Coinbase, but I would imagine all of them are. It's a relatively opaque market. You kind of have to work in it to have visibility into the depth of it. But I can tell you one thing, that charts like the one on Glassnode that show you the amount of Bitcoin in those desks, they're not capturing the whole market. It's much larger than we ever give it credit for. And whatever's going on with the ETFs, whatever's going on with Grayscale, it will continue to play a role. But as you can see, it's a bit part. It's, it's like a supporting actor in the larger cycle that we have going on here. All right, a couple other metrics I want to touch on. We've talked about this one before, but I need to bring it back, and I'll tell you why. This is the value days destroyed multiple. A couple of weeks ago, I explained in one of the streams how I designed this in 2021 to identify market tops based on the momentum of on-chain spending. It's done a pretty good job throughout time of identifying market tops. You can see that. It's been pretty consistent. But it also has some caveats. It's on-chain spending. And on-chain does have an air gap from the liquid markets where price is determined largely. There's also derivatives, right? People can bet on futures. They can bet on options. And those things also play a role in the price action. Oh, so you got the hiccups. I got the hiccups, guys. Hiccup tracker, go ahead. Been 0 days since our last incident. So this metric does call tops, but it's not always in sync with the price. Back in 2021, it quote unquote called top in January, and we know that the first high wasn't until April, and then we set a high for real in November. But it showed the blow off of on-chain momentum and on-chain spending, which is kind of like a proxy in a way for spot demand, because spot demand predominantly interacts with the ledger. I mean, far more than derivatives do. And so what I'm seeing now, the last time we talked about this, the VDD multiple, this metric was down here. It was in the middle threes. And I talked about how there was only about 3 or 4% of Bitcoin's price action that had taken place with higher values on the VDD metric. Well, now it is tagged 4.0. And that is a value that has only been seen 1% of the time. I think the number is 1.07% of all of Bitcoin's price history has existed above this value. And every time we have tagged this value, it has begun a general slowdown in spot activity. That's what we saw in January of 2021. That's what we saw here in this market, though we really had a true blow-off parabola in a lot of other cases. We started having these multi-pumps of momentum on the way up. And so I guess the question I'm really asking myself here is, now that we've signaled top on this metric, I guess it's two questions. One is, has on-chain momentum topped for the cycle? And two, is it possible for price to do one of these, where we've already topped on chain, but then price rips another 3 or 4x? Is that possible? Because that's what we got here, right? Price here is at 4,500. It topped at 19K. It 4x'd from that level after a pullback. And that was above the prior all-time high. Are we building up to that? I don't really know. But one thing I can tell you that I think doesn't look great from the perspective of this metric. Here's the prior all-time high for Bitcoin, right? Here is where we printed a 4.0 on the VDD multiple. This was price. That price was 3,300, 3,400, 3,500. It was triple the prior all-time high, okay? Over here, when we broke above this value and we printed a 4, here's the prior all-time high, right? We printed a 4.0 on the VDD multiple right here, right here. What is that price? That's 40K, 40K. That's literally double the prior all-time high. So in 2017, we were at triple. Here, we were at double the prior all-time high. Now we have printed 4.0. Where are we? We are at the prior all-time high. What does this mean? What is it? What was it back here? What was it back here? If this pattern continues, I'm gonna geek out. All right. Here was the prior all-time high. Where did we first print? Where did we first print this value? Maybe this isn't a good exercise because it was 2013. It was like right. It's like right here on the price chart. What price is this? It's like $100. Previous all-time high was $20. So this was 5x. So this was 5x the previous all-time high, 4.0. Granted, we went and we did another high. I'm not going to measure that one. But the first tap was 5x the all-time high. In 2017, when we finally made a 4.0 on this metric, we were at 4 times the prior all-time high. Or sorry, 3 times. We were at triple the all-time high. In the last cycle, we were at double the all-time high. Now we literally are at the all-time high. So how much more can there really be in this cycle? Unless this cycle is going to be different from everything else in a way that we can't measure it using the past. If someone wants to make that argument, I'll be glad to listen to it because I don't really know how they will. How do you make an argument for something that's never happened before? However, it's hard not to turn away. It's hard not to turn away from the fact that we're literally at the prior all-time high and we are printing a top on-chain momentum when every time we've printed one of these before, we were at multiples of the prior high. At least 2x in the worst case scenario. We were at least 2x of the prior high. We are at the prior high. Actually, today, we are below it. We are below the prior all-time high on Bitcoin. And we have topped on-chain momentum, that has me a little concerned. There's another metric that I've shown you guys when I've shown you VDD multiple before, which is old coin supply being spent as a percentage of itself. It's kind of similar to long-term holder supply, but it has more restrictions on it, and it doesn't have some of the clustering that Glassnode does. It's purely the volume and the age of those coins on the ledger. And that metric has printed a relative high value here. And we haven't gotten above this red line except for a few instances. And it has me asking similar questions to the interpretation of the VDD multiple. We're seeing a toppy kind of fractal on chain in terms of the momentum of spending and the livelihood of old supply. We know that we're in a regime of distribution. So the question is, will demand overpower that distribution for at least one more good leg higher? There's another pattern that I like to bring up. And when I first made this, it was kind of done as a troll, but it has ended up lingering in the back of my mind because it hasn't yet been invalidated, and that kind of freaks me out. So let me walk you through this. So what we're looking at on the chart here are Bitcoin cycles. See, 2010 to now. This was, I tweeted this last summer, so it's slightly out of date, but the figures are the same. And what it shows are cycle gains from the low in log scale, and then cycle drawdowns from the peak in linear scale. You see that? Here's the bull run, here's the bear market. Here's the bull run, here's the bear market. Like that. And here are the gains every cycle. And here are the drawdowns. Now, the drawdowns have been quite linear. Like they're really not that far apart from each other. It's pretty linear. It looks like the next one will be 75% based on this, 73, 75%. But these have been breaking down in fractions of each other, right? In a logarithmic way. And the jump from here to here and the jump from here to here imply that the next jump would be a 4 to 5x off the cycle lows, just based on this pattern here. It's hard to judge from here to here because that was from 0. We went from 0. So this is like impossible to ever build into something. It's why a 10-year CAGR or a 12-year CAGR on Bitcoin for a long time has been kind of a silly metric. But kind of ignoring this part and just looking at these three, this jump, that's about 5x. This is about 5 or 6. Divided by about 5 or 6. So if we do that jump again, that's about a 4 to 5x off the lows, right? Just eyeballing. This is just napkin math. Again, this started as a meme, remember. So a 4 to 5x off the cycle lows is what I said, right? What's the cycle low? Let's put it on a monthly chart so it's nice and clean. Here's the cycle low. What is a 4 to 5x off the cycle low? Well, a 4x is right here. Well, that's 400% actually. A 4x is 300%. That's 5. So here's 5x off the low. 5x off the low from this optimistic meme over here. 5x off the low is 77,000. 5x of 15,500. That's not very much. We're literally in the box, right? Let me draw a couple of these on here. Just hang with me here. I know that this isn't scripture, right? We're just kind of having a little bit of fun, but there's so many patterns in Bitcoin. It's like which one do you subscribe to? Which pattern do you subscribe to? Well, I like to go through and look at all of them, and some of them look really shitty. So here we go. put a border on here so you can see it. Turn off the background. This area is 4 to 5x off the cycle lows if this pattern holds from here to here, here to here, here to question mark. That's like a 4 to 5x. That's this box. That's literally where we are. In case you couldn't see. And then my toppy metric printed. And it printed in the way we just explained that kind of weirded me out. Where we're at the all-time high. We're not at a multiple of it. We're seeing a lot of distribution out of long-term holders, and everyone's focused on GBTC, but they don't seem to realize that we have a supply every cycle, and Grayscale's just playing a normal role. So it's not that different. Maybe we need to look at this in comparison with past cycles. Maybe a metric like the VDD multiple has some accuracy to it. If we look at just coin days destroyed on chain, which is a derivative, it's one of the components of this metric. It's the amount of time that is destroyed by old coins being spent and converted into new coins, right? When you transact on chain, the coin that you held that you are spending, its lifespan from the perspective of on-chain metrics gets reset back to zero. And all of that life that it accrued gets killed, so to speak. It gets destroyed. And that's what this metric measures on a 90-day basis. And you see we get big spikes of spending into strength. Those are hodlers and old supply holders coming back to life. Here was the push up in 2021, right? Here we are again. Is it really supposed to match this high when we're already set a significantly lower high from prior cycles? Maybe that's the high. I don't know. It looks a little toppy. Active entities. This is unique participants on the ledger. This is a metric that consistently throughout time was setting higher highs even in bear markets. We had the bull run, bear market crash down, set a higher low, and then continued to structurally rise, even to the point of defending its own lows here in the bear market. We didn't set a new low. But look at it over here. Active entities on chain has actually broken down. None of this structure here has been defended. We're just setting new lows. Like that's a higher high. That's a higher high, but then that's a lower low. Maybe that's a lower high. And then maybe we go down here. Is this metric going this way? That's not the way it's supposed to go. In a bull run, it's supposed to go that way. But has it topped? Did it top? Are these the highs in activity? I don't know, friends. I don't know, but I'm raising the questions because they need to be raised. Everyone seems so sure about what's going to happen, but I'm less certain. I'm less certain. Let me catch up on the chat. JJ says, I see 3 waves on total 3. Yeah, I'm not the best Elliott wave guy. It kind of takes me a while to work through it, so I don't want to subject you guys to my very painful attempts to use Elliott wave on stream. Love your work. Thanks, Chris. Appreciate that, bro. Please hit that like button if you haven't already. Probably going to wrap this up here soon. Tree Brothers Farm says, most underrated stream on YouTube. Great job as usual. Thank you so much. Grayscale coins moving. That's right, Macro Anarchy. For any of those of you who just got here, we explored how Grayscale has dumped about 300,000 BTC during this process. A little bit less. We're counting from December. But during that same period of time, long-term holder supply in general has been 3x bigger on the move. Grayscale is only a third of this. They are inside this group. So there's another 600,000 BTC from places unknown that has been activated in the last 3 months. Do not underestimate the size of this market or its ability to locate supply to service demand. It will always find it. David donated, says, love your work, my man. Thank you, David. Thank you. Very kind of you. Steve Fractal Hilly says, flick you a few bucks today, bro, because your opinion and research time is valued. I appreciate that. It's very generous. Thank you for the donation. All right. So just to kind of wrap up general thoughts today. BTC and crypto dumped over the weekend. And various charts are in different states of disarray, though the big boys, Bitcoin and to a lesser degree ETH, don't look that bad. The weekly charts have now closed, and that's a pretty bullish close for Bitcoin. It's bullish in the context of what just happened, right? The fact that we had this massive flush that on some exchanges actually swept the lows. And then like, look, this is the weekly close on Binance Perp. We swept the lows and then we closed above the low of last week. So this is starting to look constructive. Ethereum looks a little worse, but as we noted, it backtested the quarter point of the 2022 range. Maybe that structurally is a place where it can turn around. If not, maybe it needs to come down here. But it looks like it also put in some work. That's a pretty good close. We swept these lows. Oops. We swept these lows and then we closed above them. We closed above the quarter mark. Look, it's looking okay, right? Others fully back tested the halfway mark of this huge leg down, which is also the high of this consolidation here before this last move. That's where it bounced. Others is all other coins other than the top 10. Remember, zoom in here and look for structure that's actually turning. Look at this. We have a pivot. We break above it. We find it as support. Then we break higher again. That looks constructive. Now we look up here and then we look up here. And if we can start conquering some of these levels, it looks pretty good. War is good for business. We'll check on equities real quick. What's gold been doing? Not really a whole lot. Equities might be dumping a bit. It's Sunday night. I'm not going to zoom in too much on that. As far as breadth went in crypto, we were, again, just waiting to see some of this momentum actually bleed up into the higher time frames. It's starting to get there on the 4-hour. We just need more time to go by. The x-axis needs to be given room to work. From a on-chain perspective, some things look quite toppy, and they are printing toppy signals much lower on the price chart relative to the cycle than they have in the past. In some cases by multiples. In 2017, we were 3 times the all-time high when we saw this. In 2021, we were double, and today we are at the all-time high, and we're seeing the same signal. It's hard to know exactly what that means. When we saw this back here in 2021, price went 50% higher. If it does that here, then we're looking at 100K BTC. Maybe that is the top. Maybe it's already in. We're seeing distribution out of holders. It's what needs to happen. It's what happens in every cycle. You can see that. They distribute into strength to allow new buyers to take positions, to accumulate the asset. They must buy it from somewhere. And for all of the attention given to the ETFs and for all of the importance of the ETFs existing and the legitimacy they bring to Bitcoin, they are only a third of the story of where all the supply is coming from. So from a cyclical perspective, on chain, this doesn't look different than any other cycle. In fact, it's hard to really know how extended it really is. Some other metrics don't look toppy at all. They look underheated. But as we've now gone through quite a bit, the signal is mixed. We've got just a few days until the halving, which we've barely spoken about. According to Time Chain Calendar, which was developed by a guy named TC on Twitter, we got about 5 days till the halving. It's hard to know what that will do to the price immediately. It doesn't always have an immediate effect on the price, but it might have an immediate effect on hash rate. We might see some miners forced to shut down. But this is a period of time where people are excited. This is usually kind of a mid-cycle period of time. We get the halving, and then we get the bull run, right? That's usually been the pattern. And so everyone's still excited here. They're still generally optimistic, and I want to be also. But activity on the ledger looks suboptimal. Some of the measurements of momentum look toppy, though we might still be early in the distribution for holders. And we're really tied at the hip to equities. So if, tomorrow opens up and the Dow Jones is going to continue this, then all that stuff I said about the constructive price action for Bitcoin might not matter, depending on the veracity of this move. But that's it. That's what we'll talk about today. We'll save economic stuff for next time. We'll save other current affairs for next time. Have I thought about sharing my Anon Twitter account? No, John, I don't think I will, because it won't stay a tiny anonymous account for long if I share it with a few thousand people. But thank you for asking. Cheers for being here with me. I appreciate it, everybody. Make sure you hit the likes if you haven't. Hit the subscribe button if you've not. We're about 2 weeks out from our next members stream, so if you want to be there for that, make sure your name remains green in the chat. We will do another live stream a little bit later this week, probably Wednesday or Thursday like usual. And I'll decide what we talk about before then, but probably lean a little more into econ and also whatever happens in the markets to start the week out here as we have war in the backdrop. Thank you to everyone for hanging out here, for chilling with me on this Sunday. I hope some of my Aussie friends and folks elsewhere in other countries that wanted to catch a live stream were able to do that. So I appreciate the support I get from you everywhere. This is my platform. I don't charge you any money. I don't have anything to sell you. I just ask that you give me your ears, and I thank you for it. So with that, I will let you go. Can I do a video talking about passages from good books? Yeah, Michael, I will do some more reading, some more history. We'll probably do those more on Sundays in the future. But if you do want to hear a little bit more of my opinions, then just 2 weeks ago, I think it was 2 weeks ago now, someone can correct me if that's wrong, we did a live stream. I'm at the channel here. This one, A Modern Mania of Paper Money. I'm going to put this in the chat for you. Highly recommend you give that a listen because we read a bunch of books. Leave your feedback for me in the comments, and we will talk in just a few days. So until the next time, take care of yourself, friends. Take care of each other. Call your mom. And we will meet back here in about 3 or 4 days' time. Love you guys. Thank you. Cheers.